Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. Today we'll be delving into the uranium sector. We know that it's really positioned to ride this decarbonisation trend. It's an interesting market at the moment. The supply and demand dynamics continue to play out. They continue to evolve. I know we've explored the discussion surrounding Sprott, the utilities, the term contracts coming online as well. So today we're going to be talking about Lotus Resources, ASX LOT. They acquired the Kayelekera project from Paladin Energy in 2020. It's a brownfields development, which will mean that they're able to get into production sooner. And so it's a really fascinating position at the moment. We're welcoming the Managing Director, Keith Bowers, to the channel. We're going to explore both the supply and demand dynamics of the sector, as well as how ASX LOT is positioned for this next wave moving forward. Keith, great to have you on the channel, mate. Welcome.
Yeah, no, thanks very much for the invite. Looking forward to having a chat with you.
It is an absolute pleasure. There's been a lot of different news flow. There's a lot of moving parts at the moment for Lotus, but it would be good just to start with that overview of who is Lotus Resources and how are you positioned at the moment?
Yeah, sure. So as you said in your introduction, Lotus Resources acquired the Kayelekera Uranium project of Paladin Energy in March of last year. So we've owned it for about 18 months or so now. And Lotus itself, background is it was originally a company that had some assets over here in Australia. But the new group behind Lotus Resources got a real passion for uranium. And we were out looking for a uranium project that we think we could bring back into production such that it would meet the new cycle that we think is starting now. So Lotus Resources was chosen as that vehicle effectively. We went through the negotiations with Paladin Energy and acquired the asset, as we said. And a couple of things that we really liked about the Kayelekera plant was, first of all, it is a proven producer. And that's really important for us, I think, from de-risking the project. So the asset itself operated from 2009 to 2014. And in that period produced almost 11 million pounds of uranium. So not only did it produce the uranium and it produced that nameplate capacity as well, but also really importantly, all of that product that it was produced was accepted by the Western conversion facilities and by the utilities. So it's a known product out there, which is important. And we think when we go and speak to the utilities, and we're already seeing that already, they know the product, they have confidence in the product, and therefore we think we've got a bit of a leg up over maybe some of our competitors who haven't produced commercially before.
Yeah, it's quite an interesting proposition. I guess before we explore into the Lotus Resources specific and the Kayelekera opportunity, it'd be good just to set that bit of a scene as well for investors who might not be familiar currently with uranium, the nuclear discussion. Wherever we look at the moment, decarbonisation is that trend. We're moving away from fossil fuels. Why is it that nuclear has that ability to really fit in? We know zero carbon baseload energy. Can you give that overview, please?
Yeah, sure. So when you look at this decarbonisation, as you said, or reduction in greenhouse gases, I mean, everyone's looking at renewables, and renewables are great, and they certainly have a place in terms of moving forward. But some of the issues with renewables, like solar and wind, they're not full-time baseload energy supplies. So if the sun goes down, you're not producing any power from your solar. When the wind drops off, you're not producing any power from your wind. Uranium really gives you that baseload there. It's a 24-hour, effectively 365-day-a-year source of energy. It is a very, very safe source of energy as well. I know there's been some horror stories out there over the years, but if you have a look at some of the statistics around the mortality rates associated with nuclear compared to some of the others, nuclear is some of the safest power out there at the moment. And we really need to get that message out to the public and out to the investors that investing in nuclear is a really good thing to move forward with. So we're very, very confident in the nuclear space. We think there's definitely a opportunity there for it to grow extensively. And if you start to have a look at some of the, I suppose, supply and demand data that's out there at the moment, we recognize that today the demand side sits at about 180 million pounds per annum, but the primary supply only sits at about 120 million pounds today at the moment. So there's this 60 million pound gap at the moment, and that gap at the moment has been sourced from secondary supplies. And secondary supplies are normally things like inventories and all that, but also a little bit of fancy footwork around some of the conversion facilities where they retreat tailings and all these types of things. But there's only a limited amount of inventory out there. The inventory has been depleted rapidly. So we can see that there's going to have to be some new primary supply to come back online to take up that secondary supply deficit. But also we recognize going forward, there's actually a huge increase in the general demand for uranium as well. So we expect in 5 years' time, 10 years' time, that 180 million pounds could grow to 200, 240 million pounds required. So not only does the primary supply have to meet the deficit in terms of the secondary stuff, but we're also now saying, well, there's even more uranium required. So there's even more mines need to come online to be able to supply that. And we think there's a real opportunity there for developers such as Lotus to take advantage of that.
Yeah, it's a really interesting market at the moment. I think just to give that insight as well, it's, as we know, there's a lot of different companies at the moment, or a lot of different projects that went into care and maintenance as the economics no longer stacked up after the last cycle. Lotus, of course, with the Kayelekera project, previous producer. Can you give that insight into care and maintenance? We often hear $60 per pound might be in and around that magic number. How are you perceiving that? And what are you thinking about at the moment as you move towards that restart?
So I'll just give a little bit of background before I answer that specific question. So what we did as a company, when we acquired the asset, the first thing we did is we did a scoping study in terms of the restart of the asset. And those are two things we try to do with that scoping study. First of all, because it's a past producer, we went back to the historical data. So we looked at the throughput rates, we looked at the reagent consumptions, we looked at the availability of equipment and all this type of stuff. So we presented a feasibility study that was based, a scoping study that was based on real operating data. And we are very, very confident on those numbers produced from that. And in that operation, or in that study, we came out with a C1 cost of around $35 per pound. Now, the other thing we did with the study is we obviously went through it in a lot of detail, and we identified what were the value drivers or the cost drivers for the project. And we identified 4 areas that we believe we can work on to try and improve on those costs. And those are things like ore sorting, which allows us to increase the grade of the feed material. We're looking at things around changing the power from the existing diesel gen sets to grid connections and some other options. We're also looking at acid recovery and improved ways of managing our tailings as well. So the idea is those 4 pieces of work that we've been doing for the last couple of months or so will be used in the feasibility study that comes out next year. And we would expect to see a material drop off in our C1 cost based on the results coming from that. So if we would end up with a C1 cost of around $30 per pound or something like that, and you took an all-in sustaining cost of maybe the upper 30s or something like that, you know, you can then start to get a bit of a flavor of where we think we need to have that uranium price to be in order to make that final investment decision.
Yeah, I appreciate that context and background for it. I guess in terms of the next steps then moving forward for Kayelekera, as you mentioned, the feasibility study will be coming up into the next year. From there as well, I think it's a $50 million CapEx. So it's actually a pretty easy restart cost in comparison to some of the other projects. What's the next steps from there that investors should be looking out for?
Yeah, so feasibility study comes out in June next year as our target at the moment. And as you said, there's a $50 million capital that we identified in the scoping study. But I do want to be absolutely clear about that. The $50 million is required for the refurbishment of the existing plant. If we were to implement things like this ore sorting technology or the grid connections and all those types of things, those are dollars that would be required on top of that $50 million. Now, we're not talking huge amounts of dollars. I mean, we're talking tens of millions of dollars extra. We're not talking hundreds of millions of dollars extra. So I can still see us coming in well under the $100 million mark in terms of our total capital required to restart the asset, including working capital as well. And as you know, I mean, our current market cap sits around $350, $360 million today. So I don't see that as being a real issue in terms of either an equity raise or a debt raise for the company going forward. So that's from the project perspective, but we're also busy at the moment in terms of some exploration work. So we started an exploration program a couple of months ago looking at expanding the existing Kayelekera resource. So that's really on the perimeter of the existing resource to see whether we can step out and grow those pounds a little bit. We're looking at that. We've had the assays are starting to come in now for that work. Our geologists are starting to have a look through those, and we should be able to make an announcement early in the new year on that. We also acquired some new ground 2 months ago called Livingstonia, which is adjacent to an existing exploration license that we have. That Livingstonia had a historical resource on it, a JORC 2004 compliant resource of about 6 million pounds. So we're going in there doing the QA/QC work so we can actually upgrade that resource to a 2012 compliant resource. But we're also doing work around extending that because we've seen some interesting anomalies from the radiometric analysis that's been done. So we've got a drill program there at the moment, actually working at Livingstonia. The drills are turning there at the moment, and we're looking forward to sending those samples in for assay early next year as well that we'll be able to report on. So that's what we're doing on the exploration side. And maybe just one other thing really to touch on very, very briefly is that we made an announcement last year as well about a rare earth anomaly that we've identified on our mining license as well. So that rare earth looks like a really high grade material. We were grading about 3.5% total REOs. And the real key ones, these neodymium and praseodymium ones that everyone's interested in for permanent magnets, those were sitting at about 1 to 1.5%. So a real interesting anomaly for us. We've gone back there this year. We're doing some more drilling there. Those samples are also on their way to the lab at the moment. And hopefully we'll be able to report on some rare earth deposits as well on our mining license.
There's plenty happening on all fronts there. I'd love to build on a couple of those exploration discussions. Firstly, the Livingstonia one, in terms of the capital efficiency of the purchase, it looked like an incredibly efficient purchase in terms of the pricing. Were you really happy with that? And what's the opportunity for the upside that you see there moving forward?
Yeah, so the way that the purchase was done is there was an existing mining license that was over the area that was owned by a Malawian company that had coal mining rights to it. So in negotiation with the owner of that mining license, what he agreed to do was to actually reduce the area of his mining license because there was no coal deposits on top of where we were interested in the uranium. And we paid him a compensation for him reducing his mining license. We then went and pegged our exploration license over the area that we did. So that was the mechanism behind the acquisition, is that we was actually us pegging a new exploration license over a previously pegged ground, was the way that the whole system worked. So we were very, very happy with that. It's given us an opportunity, as I said, not only to convert that historical resource into a JORC 2012 compliant resource, but we've also recognized extensions into our existing exploration licenses. So we already had a license to the north, and we can see this anomaly extending into our exploration license. And that's where our drills are turning as well at the moment in terms of trying to extend that resource.
And then on the rare earth side as well, we know that rare earths is another sector that's been running hot lately. NdPr prices continue to move higher. Of course, it's still early stage, so we'll wait for more insights to come to market. But do you have any ideas about, will you be focused on potentially developing that out, or will you be running it concurrently with uranium moving forward, or still too early to decide on that?
We certainly are a uranium company. That's our primary focus. So when we've got a better understanding of what these rare earths look like in terms of we've got an idea on the grades already, as I mentioned, but it's really the size we're trying to get an idea of in terms of the depth and also the footprint of it. Once we get an understanding of that, and maybe do a little bit of test work in terms of understanding the potential processing route, we can then make a decision what we want to do. Do we try and develop ourselves? Maybe we go into a JV with another company, or maybe we spin it up. We're not sure at the moment. I think we want to try and get a bit more information on what we think the value of it is before we enter into any of those sort of discussions or negotiations.
And then just flowing back through onto the uranium side, of course, we know that as the prices continue to move up and as you get closer potentially back into production, the commercial agreements are going to start to pick up pace. You recently hired a US-based sales and marketing executive, I think, to start those discussions with utilities. Can you provide some flavor about how those discussions are going and how you're thinking in terms of terms, spot-based, and those types of focuses moving forward?
Yeah, so as you said, Dr. Robert Rich joined us a couple of months ago, and he's been mandated to help us, let's say, reintroduce Kayelekera to the North American market, and also to introduce Lotus as a company. So he's been in contact with a lot of the utilities in terms of doing that work. So, saying Kayelekera is coming back on again, there's a good team behind it. They're looking at bringing it back online again in a couple of years' time and all that. He's also been attending a number of conferences to build up our profile within the US as well. And we have started to have some one-on-one conversations with various North American utilities. And we'll see where those go. I mean, it's great to be able to start the conversations now. Again, how do you do the pricing mechanism? Well, that's always going to be a real interesting discussion. I think we want to have something that's market related myself, but we'll see where we go with that. Still early days for us. I think we're going to start working a lot more on this marketing stuff, probably towards the middle of next year when we've got our feasibility study out. I expect a lot of these utilities want to get some confidence about our restart strategies and costs and all that kind of stuff. And we need to have the feasibility study completed to be able to do that.
And then just on the ASX LOT front, in terms of share price, the company has moved higher like many of the uranium companies over this past period. But in terms of asset size, it does look like you're still trading a bit of a discount on a comparison basis to some of your peers. Did you have any reflections on the share price at the moment, and any thoughts about what investors should look for as some key growth drivers moving forward?
Yeah, I think it's been an interesting one. And it's a question that I often get asked by the investors or brokers, why do I think that our share price is at a slight discount to some of our peers? And I think there's a couple of things out there that maybe drive that. First of all, we've only really started marketing Kayelekera and Lotus probably in the last 6 to 7 months. So we've still got a lot of, things to do in terms of getting that story out, touching the various investor bases that may be interested in investing. And I mean, it's conversations like this that are really important to get that story out there. And we're certainly working hard on making sure that we touch it or get in touch with many people as possible. The other thing is, I think that some people maybe have got a bit of a negative attitude towards maybe Malawi not being known as a mining jurisdiction. And I think it's important for us to talk to those people and explain to them that it actually is a very, very good place to be working. We're very, very happy with what we're seeing at the moment from the government. The government of Malawi, there was a change in power last year, a very, very smooth transition from the one party to the next party. The party that's currently in power is much more business orientated, and we're starting to see that as well through the negotiations. It's also important to note that, that the government of Malawi is a 15% owner of Kayelekera as well. So they're very, very keen to see this operation back up and running because they recognize the significant revenue that Kayelekera can produce for them. And we do know that when Kayelekera was operating in that period of 2009 to 2014, it produced something between 1.5% and 2.5% of Malawi's GDP. So it is a very, very significant opportunity for them, and they're very, very supportive of us bringing it back on again. The other thing maybe that some people have got some connotations about Kayelekera is maybe it was always considered to be a relatively high cost producer. And as I said, we did that scoping study to determine what our base case is. But I think we really have identified what the cost drivers are in terms of being able to bring that cost down. And we have seen some significant success in those 4 different areas. And hopefully when we announce the feasibility study, you're going to see those costs coming down.
Seems like there's a range of tailwinds, both on a company level for Lotus as well as a sector. I'd love to just hear your thoughts at the moment in terms of this uranium market. It looks like the cycle may be restarting again. How are you perceiving it into 2022 and then further out on that macroeconomic outlook?
Yeah, so I think it's been a real interesting year for uranium so far. I think that the Sprott, the Sprott fund, has been an incredible player in the market. And I think that's going to become even bigger, because anyone who's following it knows that at the moment, Sprott's just listed in Canada on the TSX, but they are planning on doing a US listing. And I believe they're going to be submitting the papers to the New York Stock Exchange in January sometime. And I think they're expecting somewhere between a 3 and 6 month period before they'll actually be able to be listed in New York. And after that, I can see them raising some really, really large dollars for them to be able to go into the market to buy more yellowcake. And that's going to be an absolute massive driver for the uranium market going forward. So waiting to see what happens on that. We already know from the discussions that we've had with various utilities and all that, and even some of the brokers out there and traders, that the increase in the current spot price, so probably when it started off at about 32 or so before Sprott came on board, it got as high as 51 and today is trading around 44. But those spot prices are starting to impact some of the long-term prices, and we're seeing those go up as well. It's all positive from that perspective. I think it's really interesting to listen to some of the politicians out there. You've got the US has been really, really supportive in terms of the nuclear industry going forward. All this advanced reactor designs, providing funding for the continuation of the existing nuclear fleet is really, really good. And they are starting to hint at some idea around some new builds as well, which is really great. Europe has always been supportive. And I mean, France, I think, announced a couple of weeks ago that they're looking at building 6 new reactors. You've got a lot of reactor builds going on in the UK as well. There's 2 going on there at the moment. It's really good stuff going on there. And I think one of the big drivers that's going to come out of Europe is if they can actually classify nuclear energy as a green taxonomy. I think that's going to make a big difference to the investment community going forward. If we can actually get nuclear classified as a green energy, that then opens up a lot more investment opportunities. And I think it actually makes investment a lot cheaper as well, or financing a lot cheaper for these companies. So some big stuff happening there. And then we haven't even touched on China. China is absolutely huge. I mean, you cannot believe how big China wants to go in nuclear. The news that's coming out of China in terms of the investments over the next 10, 15, 20 years is absolutely astronomical. And we're going to see a big impact from that. Even if they don't directly buy on the spot market from some developers, we know that they're going to be buying, that they're going to be coming into the market and either buying assets or developing assets as well. So that's going to be really interesting. What else you've got? India's a big player as well. I don't think people have recognized it, but India could be a really big player moving forward. They've got a very, very aggressive program in terms of their nuclear builds. Japan is bringing their nuclear fleet back online again. So this is all pointing to real significant increases in uranium demand moving forward. And there's another thing out there that people are starting to talk about, these small modular reactors as well, SMRs that are coming online as well. There must be 50 or so companies at the moment that are looking at these SMR technologies. And that's really quite simple technology in terms of an operating philosophy. So the technology behind it, is quite complex, but actually operating these SMRs is a relatively simple system. They're all passive systems, passive safety systems, and all this kind of stuff. And I can see that being a real growth area for the nuclear industry as well. And the SMRs haven't even been included yet in the future demand that we're seeing from a lot of these suppliers coming out. So, lots of opportunities going forward. I think there's a couple of real exciting years ahead of us in the nuclear space.
This clean energy transition is only just beginning to pick up pace, and it looks like nuclear will be that key component. Yeah, I'd love just to hear your thoughts for those longer term shareholders of ASX LOT, or maybe those prospective shareholders who might be just learning about Lotus Resources now. Did you have any final reflections you wanted to share with them?
Yeah, I think, one of the important things that you've mentioned is I think we're still a little bit undervalued compared to some of our peers. I think there is still a lot of opportunity there for share price growth, just basically on what we have at the moment. So we need to get that story out there. We need to be talking to the various investors and getting the story out there, getting our share price up. But on top of that, there's all this really good news coming out from the company itself. We've got some really exciting exploration stuff to come out. We're going to have our feasibility coming out. We've got our rare earth opportunity as well that I think are going to be some real, good drivers for our share price moving forward. And then you've got the general market as well that I think next year is going to be an absolutely fantastic year for the nuclear industry in general. And we all know that share prices go up when the good news comes out about the nuclear market. So lots and lots of good stuff coming out next year. So I think there's a real opportunity to invest in Lotus and make some decent money.
That is the Lotus Resources story. It's ASX LOT. If you enjoyed this video, don't forget to hit the like button. Feel free to share it out. We make daily videos each and every day, so make sure you've subscribed and turn your bell notifications on. It's Keith Bowers, the Managing Director of Lotus Resources. It's an absolute pleasure to catch up, mate. Really enjoyed discussion that, and looking forward to catching up sometime next year. Thanks for joining us.
That'll be great. Excellent. Thank you.